welcome to another edition of Weekly Forex Forecast. And my name is Harry Halen, your financial analyst and Forex mentor at FXKLEX'S. In today's video, we're going to be talking about the Euro USD, the GBP against the American dollar, the New Zealand against the USD, and I have the USD against the Swiss, I have the American dollar against the Canadian dollar. And we're going to be rounding up things with the gold. There haven't been much actions in the market during the last spent week, but I'm going to be showing you what I'm watching out for should in case of any breakout opportunities. So let's get started right now. A quick disclaimer for today's video: it is for education purposes only. All these are my personal opinion and not intended as an investment advice. Forex is a high reward and high risk in business, and you should not trade with borrowed money or money you cannot afford to lose. Read more about the disclaimer notice of this content below the bottom of this video. Before we get started, be sure to click on the subscribe button below this bottom of this video and also click on the bell icon so you could get notified anytime I post these videos. So the first on our list is the GBP against the American dollar. I mean the pound sterling against the American dollar. Price have been in a consolidation phase right from 22 October 2019. And that is almost running to 6 good weeks right now. If we measure with our cross share tool, and that is almost 30 days candles, right, from this consolidation phase right here. Yeah, let's make a measurement. That should be 30 days, right, from here, right here. That is 30 days of candle formation on our daily time frame. So the question right now is this the way GBP USD is going to continue for the remaining of the year 2019? Well, no one can tell. The chart have to decide that. Right now, I'm sitting out of GBP USD because I can't yet figure out a technical signal or formation in line with my trading strategy for any trade execution or probability. Well, through history, we see GBP USD have been in a bullish trend, and price have been carving a high, low, high, low, high, low, and there is a high to this region right here, and there is a high to this region right here. Well, due to this formation at this region right here, I do not like to trade the market within the range. As a day trader, I look out for price action in conformity with my trading strategy. Technically speaking, if the bull can move price above our resistance level at 1.2981, I mean this region right here, 1.2981, the bull can move price above, then if it can result into a daily close above this region, it will therefore serve as a point of interest, a signal for the bull to gather momentum to test our next resistance level at 1.3173. Our next resistance at this region here. And if the bull failed to move price to up right there, then it's gonna give the bears probability to move the price downward there, and which may still result in a medium of consolidation. However, if the bears can be able to break this region right here, if the bull were unable to protect this horizontal support level right here, which lies at 1.2765, then it's gonna give the bear the probability to retest our previous support level at 1.2582 right here. So for now, I remain neutral on GBP USD, not until I can spot out a technical signal for a trade execution opportunity. Going through history, we can see our support level right here, which acts as 1.2765. It's an active key or support level, which is also acting as a resistance level right here. Remember, a previous support level once broken will turn to a new resistance level, and then resistance level once broken will turn to a new support level. And this is for right here. This is a resistance level when it was being broken downward as a downtrend, and when the price moved up again right here, it's now acting as a valid support region for prices right at this region. Again, going through history, we can see this our resistance level right here is also an active horizontal key level right here, which also acting as a previous support level right here, and also this is preventing the bulls from making price going higher. for the fact that on our weekly time frame, GBP USD is still trading up as a trade in a consolidation phase. I still remain neutral to this market. And the second on our list is Euro USD. Euro USD has been in a bearish trend on a long time trend, and right now our price seems is still striving for change of trend. This is a bearish trend for a long period of time, and this seems to be a change of trend. But the reason why I say price is still striving for a change of trend is because we can see right here this is a high, no, right here after the broken of our head and shoulder right here. Since then, price have been in a downward movement, and this is a low high at this region. And right now, this region right here is still acting as a low high to right here. It's a low high to this region right here. And going through our historical records on our chart, we can easily figure out that this key level right here, the key level right here, have been a very strong level for price right here, for the bull to move the price up right here. And this real level right, horizontal level right here, was being retested. That was from few weeks or weeks ago. That was on the 14th of October, before the price eventually moved down and tested this sub region right here, acting as a support region. And going through history, we can see that the horizontal key level at 1.1074 is in fact a strong key level to watch out for. We can see after price did broke down of this horizontal key level right here, and then again the same thing happened at this region right here. Price did break down again. In fact, this is a horizontal key level to watch out for. I didn't expect price to move down again or without breaking this region. For the fact that price to break this horizontal level right down again, it's a signal that this euro against the American dollar is still very weak. There is not much momentum for the bull to move price up or upward. Therefore, if the euro USD trend is definitely a strong trend, it shouldn't have closed below this major key factor level last week. And we can see right here there are a series of price actions taking place at this region right here. Previous retest of our key level support at 1.0988 resulted into a bullish engulfing bar, and which did took this trade. And that is, if you keep up with my technical analysis, I sent the trade I figure out right here to my members. I said I can figure out a bullish engulfing bar right here, and we took this trade. We made some pips before the price. I advise everyone to put their take profit right here, because I can figure out right here that this is a very important key level factor zone to watch out for, because price have been respecting this medium right here at the July, and this another region right here that is in August, and then another price action level right here that was September, and then another one right here that is October. That was the major reason I advise everyone to put their take profit right here, because I can see this region as a very strong key level factor zone to watch out for. And now again we are having a retest of this level, and price did respected this level. That was on Friday session. Some traders tried to short the euro against the American dollar right here, but this resulted into a false breakout. After price moved downward, that was a reverse of trend upward. And this is one of the significance of trading on the daily chart frame, and that is why I base my judgment on the daily time frame, and also I relate it with the weekly time frame and the 4-hour time frame. Anything above that, below that, I don't analyze it. Well, the signal right here seems like a bullish engulfing pattern, but I am not here satisfied with this signal right here, because I didn't expect a retracement should occur right here. I didn't expect a retracement. I was looking out for something like a bullish pin. Something's gonna form like this, a bullish pin with a little tick right here, or totally an engulfing bar, maybe with a little tick or something like this. But actually I'm still not yet convinced with this signal right here, and I can't base my judgment as an entry, no signal for me to take a buy order at this region, due to the fact that this candle formation did retrace, and that is the action of the bears, giving a signal that the bears are still active in this market. Remember, it's still in a downward trend from our major key level factor zone we are watching at this region right here. However, for the fact that price is still respecting this there is horizontal support key level right here, I still remain bullish on the Euro USD, but I need to have a confirmation of a strong entry or signal before I can launch the euro against the American dollar. And now on USD against the Canadian dollar, we can see price have been fluctuating through this region for a period of time right now before price did broke out of this region right here downward, and price did move up again. So what are we looking out for on Canada? So right now we can see this is a major key factor zone for us to watch out for as a resistance level right here. Price respected this key level right here, another respect at this region, and this previous week Spain price is respecting this level again. And did remember that we have a bearish pin bar right here, which did move price downward, and since then price have been respecting this region. So if we go on our 4-hour daily time, on our 4-hour time frame, and on Canada 4-hour time frame, we can see price have been in a bullish upward trend. That means price have been making a series of high, low, high, low, high, low, high, low, and then highs, highs, highs. Yeah, so we can see we are having another retest of our horizontal dynamic support. I mean our dynamic support level right here. And remember, we have a test of this line right here acting at the second time right here, and this is the third time right here on our 4-hour time frame. Here, our high low right here, our high low right here. This is a resistance key level we are watching out for on the daily time frame, and this is a resistance this is support key level we're watching out for on the daily time frame, and this is a resistance key level we're watching for on the daily time frame. For us to short the American dollar against the Canadian dollar, we have to see a decisive volume break below this our high low right here. That will be a 4-hour close. If price can close on the 4-hour time frame right here, I mean a good close below right here without a real action of the bear, maybe a retracement, a full bear candle, then gonna give us an entry signal for us to short the American dollar against the Canadian dollar. We're gonna put our entry order right here. Our entry will be here. That is if we can spot out a well-defined bearish signal to short the American dollar against the Canadian dollar. And we're gonna put our take profit right here because we have a key level, horizontal level right here on our daily time frame, and we put our stop loss above right here. We still respect our 2 ratio risk factor. So let's check on the daily time frame now what we can see again. So on our daily time frame now, we can see our dynamic support level right now is being retested, and we can see a bearish pin right here, a bearish pin. Actually, this is a rejection bar. It's a rejection bar and not forming a bearish pin bar right here. So next week we are looking out for where that will be a daily close above this dynamic support level is gonna give us a signal that the bears are trying to move back the trend in a bearish condition to target this region. So putting an entry order below this lows of this candle right here, that will be a daily close above this dynamic support level, then our stop loss at the previous high here on our take profit here. And right now we are on the New Zealand against the American dollar. We can see this is very strong key level, resistance level we are watching out for. Price tested this region right here, and this zone will serve as a resistance level for price right here before price did move downward, and then another retest right here, price moves downward again, another retest, that is the third retest, and right now this is the fourth retest. Remember, we have a formation of an head and shoulder right here. This is a head, shoulder right here, this is an head right here, and then this another shoulder right here. You can make this to this region too as a formation of the two head right here. So therefore, I'm spotting out 2-8 region here. So we can make this as a right here as 2-8. So this is a 2-8 right here, and then one shoulder where we have our neckline at this region here, which is serving as a key level factor resistance level for us to watch out. Also, again, if you watch this chart properly, you can see we have a formation of a rising wedge. I mean a rising channel, a rising wedge. We can see price was moving up. That was a retest of our channel. That is our dynamic support level right here. And on that retest right here, we have a retrace up right here, our dynamic resistance level, and that retest here, and that retest right here. So right here, and also again, if you watch properly, we can see we have a formation of an ascending triangle right here. Technically speaking, in a rising channel, as in a rising wedge, price have the high probability of falling or downward, as in a bearish move, that is in a rising wedge. And also in an ascending triangle, price have a probability of breaking upward. But remember, we did have an horizontal resistance level right here. This is a major factor or key level right here. Prices reject this region right here. Going back to our historical record, that was on the May and the June here. Okay, and again right here, this resistance level is still navigating at this region. So if the bulls can able to break this region right here, they still have another resistance level to break at this region. But by the way, we can see the bears are active right here. We can see the bearish pin which formed last week Friday session, which is also a signal that the bears are still in control. Right now, I'm still remaining neutral on USD, New Zealand American dollar. I'm still remaining neutral. I need to spot out a well-defined, structured, technical entry signal for me to take a trade. By the way, anywhere the market is gonna break to, maybe the market is gonna break upward, I wouldn't take this kind of trade if the market break upward, for the fact that I don't like to take the first breakout. I want a retracement, a retest of this line for me to confirm this is now acting as a new support level before I can take a trade. But also, I won't take this trade because I can figure out another key resistance level right here, which was being respected at this region here, right here, and then we can see respected at this region right here. That was a price action right here, which leads to a bearish or a bullish pin bar. Actually, it did fail. It didn't move much up before it broke downward. And also, in the second way, if price is gonna break downward as a rising wedge, I won't take the first breakout. I want the breakout and then a retrace of our trend line, which will now be acting as a new resistance, at a new dynamic resistance level. If price can retest this region and this trend line can repel the price action right there, then I will be interested to short the New Zealand against the American dollar. But remember, we have a key factor support, a key level, horizontal level right here, which was being respected at this region, and then respected again at this region. So if you are shorting the New Zealand against the American dollar, make sure your trading strategy obeys the rules of 2 ratio multiple. So that means if you are willing to lose $10, then you must be willing to have at least $20. So that is my opinion on the New Zealand against the American dollar. You can have your stop loss, or calculate your stop loss to be the root of 2 multiple ratio. Now on USD switch, we have price have been in a phase of consolidation over some weeks right now from this region right there. And if we did measure, we can see that was from September, that was from September till now. Price have been trading within the range. in this kind of market, no, I don't like to take a trade within the range. I don't like to take a trade within the range, I mean. But since right here, what we can spot out right here, that was a price action right here, obeying this resistance level again at this region. Back to history, we can see that was a respectable price respected this region again in the historical record, and then also price didn't get here or before it was being rejected downward again. So price, no, the bears have high tendency of moving this market downward again in a bearish condition, in a bearish trend, to retest is our horizontal support level, which acts at 0.9838. But I don't like to take this kind of trade as a trader. As a trader, I look for price action. I look for a very clear technical pattern, technical chart analysis. I look for the best and the best with high winning probability trade. So I'm sitting neutral on the USD switch, but I'm not saying there is no trade opportunity right here. But according to my own trading strategy, I don't like to trade the market within the range. Also, if we go through our chart pattern analysis, we can see this is in a triangle, that is in a symmetric triangle formation. We can see this is our horizontal resistance level right here. This is a high right here, and then we have another retest right here. Price broke out right here, and there was a retrace of this line right here. You can see the red candle formation right here. That was a retrace right here before price did moved up to test this region. But the bears are defending this region, this resistance level right here, and the bears have no high probability they can move price downward again and retest this dynamic resistance or support level at previous resistance level, now acting as a dynamic support level. They can retest this line. If the bears failed to move price downward, the bulls are still gonna move it up. By the way, it can still result in a trade within the range, and that is why I don't like to take this trade. But if the bulls were able to move price above, I mean that is a daily close above this our horizontal resistance level right there, a daily close above this region right there, it's gonna give the bulls opportunity to move price upward to retest our next resistance level, which acts at 1.01009. And then now on gold, we can see price has been falling downward in the falling channel wedge. You can see price have been carving a high, a low high, low high. It's a low high here, another low high here. This is the maximum movement of gold. That was in September 2019, and since then price have been moving downward in the falling wedge. Remember, we have the formation of an head and shoulder right here, which did failed. This is the neckline, and then this is the shoulder right here, which did fail. But since then price have been moving in a falling wedge, and this is the formation how the price have been moving right here, moving up, testing up and down. So right here, I send the signal to my members. If you watch my previous my Telegram video where I sent a video, I said I can see a price action retest of this key support level right here, which was acting as a support level for price on our historical record on our chart right here. Price is moved up a little bit, but price was unable to break above our resistance level, which lies right here, which is key levels or resistance level for us. And from right there, price did move downward. And according to our moving average, we can see our 10 moving average as it has already crossed or below the 20 moving average, which also a signal that the gold is in a downward or in a bearish move. Right now, I haven't still yet see any technical signal or entry signal for enter into the gold for a trade. But according to technical chart pattern analysis, whenever you spot a falling wedge, a falling channel, price have high technical probability, technically speaking, price have high probability of breaking upward, or that is the normal technical direction the price should break up to. But when price breaks out in a falling wedge, maybe in a falling channel, most time it doesn't move much, and it mostly results into a bear or trap. So I don't like to trade that kind of market. So right now I'm not looking for an opportunity right now to short the gold. I'm looking, if I can see price action right here, I'm looking to long the gold. But right now I'm still remaining neutral on the gold, and this is what I can see on the gold right here. Remember, all these technical analysis are based on my personal opinion. They are not intended as a financial advice. So please do not trade more than you can afford to lose, and then do not trade a borrowed money. And do not forget to click on my subscribe button below this video, and also follow my social media or pages with the user ID FXKLEX'S. And also do not forget to follow my Telegram ID, that is FXKLEX'S. Right there I'm always active. I send daily technical analysis both on 4-hour, or whenever I see a quick an action in the market. That is where I quickly make a video, maybe a comment, an image of what is going on in the market. This Telegram page is really gonna help you, especially if you're an inexperienced trader or a new trader, or even an experienced trader. It's gonna help you in your trading journey, your trading decisions, and also gonna help in building your confidence. And thanks for watching this video. If you like this video, do not forget to give a thumbs up for this video, and you have a wonderful day ahead. Bye.